everyone, welcome back to Market Update featuring by Marketsall and Rationale. We're kicking off this week with a major geopolitical shift. Over the weekend, the US launched direct airstrikes on Iran's nuclear facilities, marking a serious escalation in Middle East tensions. Markets were already reacting. Oil was up, futures are in the red just before US involvement. And a safe havens like gold and dollar are in kind of focus right now, with the oil for sure. In today's video, I'll walk through what exactly happened, what it means for energy markets, and how we might want to position ourselves in these days ahead. So let's get into it. First of all, here you see a satellite image shows damage to Iran's one of the three the nuclear complex, which is called Fordo nuclear complex, after the US airstrikes. As you can see the damage. So the US carried out airstrikes on three major Iranian nuclear facilities: Fordo, Natanz, and Isfahan. So President Trump called the operation very successful and stated the Fordo is gone. This bunker busting cold bombs and Tomahawk missiles were used in the attack. No radiation has been detected, according to Iranian source, who also said that the sites, these nuclear sites, were already evacuated earlier than the attack. And US officials told Tehran this was a one-off, a limited strike, not a move toward regime change. This was only targeting the nuclear process of Iran. And Donald Trump also warned that there will be a peace or there will be a tragedy for Iran. It was a threat actually. And Iran responded with some missile attacks toward Israel and warned there would be consequences for sure. Iraq, in the region, Iraq and Saudi Arabia have both called for de-escalation, and Iran may now exit the nuclear non-proliferation treaty as a first reaction. But we're still watching it. Still, there's too much uncertainty going on in the market. Yet we haven't seen huge impact, especially after the weekend, on market pricing, I think. So what comes next? That's the main question. As you can see here in the chart, the Strait of Hormuz is is the major focus right now, as Iran can close the Strait of Hormuz, which would damage the oil, all trades, and especially oil trade from the eastern countries to west, which would around 20% of general oil has been transporting through that strait. So that's highly crucial. And as you can see, the odds that Strait of Hormuz could be closed by Iranian authorities is around 50% right now, according to Polymarket probability. So what are the key market risks? That's the main issue right now. Will Middle East oil exports be disrupted, especially via a Strait of Hormuz, or could other countries like Russia get involved in this? I think we can call it war. Oil prices are expected to rise in the short term as markets price some higher geopolitical risks. That's for sure. With this mentality, there is concern about Iranian retaliation against US bases and some a regional energy infrastructure disruption through a Hormuz, or attacks on refineries in Saudi Arabia, which is, for example, called Abqaiq in 2018, remain real risks, because Iran also, not only US, they can also attack to some US facilities in allies of US. So will the conflict widen? That's the main issue right now. Russia has condemned the strike, but it's unlikely to intervene militarily due to, first of all, Ukraine and the potential sanction risks. While Russia and Iran have some strategic partnership, military support isn't part of the deal. That's important. And also, if crude oil prices stay elevated, market could reprice for inflation risks. Again, like a pushing back expectation for for rate cuts. I had mentioned this in my earlier videos that the oil price, the potential increase in oil price is less probable unless there won't be any catalyst like this, because US is in disinflation path, and with the potential tariff impact, there could be more inflation. In order to compensate that, they need to take oil prices under control. With that mentality, they're just trying to control the supply of oil through OPEC plus countries, right? That's the main mentality. But this war catalyst is totally different issue for sure. But I don't think that they can bear to such oil price escalation. I mean, if I see some oil price around $100, I mean that for me, I would be seeking to short the oil market. And we need to also be careful on what bond market signals. Watch whether yields drop due to a risk off sentiment, because when there's a risk off sentiment, investors go and buy treasuries for sure as a risk off movement, or we need to watch bond market or potential rise due to inflation fears, because I mean, as I had also mentioned this, a US long-term end of the yield curve is more influenced by inflation expectation or structural growth or something. This, I mean, for the current case, the issue is potential inflation expectations. Dollar dynamics is one of the most important thing that we need to see, as it was oversold recently since the beginning of 2025. A sharp rebound in dollar could tighten global financial conditions for sure, especially in emerging market economies that rely on a hot money external funding, South Africa, Turkey, some other Brazilian stuff, Mexico. What about equity market? What should we expect on equity market? Asian and European markets may underperform, especially those that rely on energy import. Meanwhile, US defense and energy stocks could stay strong in amidst such an environment. US political gridlock is another issue. If military actions lacks a congressional backing, we may see more political division, fiscal uncertainty, and even questions around institutional cohesion. So that's another thing. And a global power reactions, for sure, be mindful of for sure potential moves from Russia and China. That's something that we will be monitoring. So that's more or less key market risks that I can see for now. And in such an environment, how I would shape my portfolio, how I would react to such environments. First of all, I would like to talk about this. Chart. This is monthly dollar index chart, and as you can see, there's a parallel channel, and currently is the XY is traded around the lower boundary of this parallel channel, which might act as a support, especially this price action coincides with the geopolitical tensions. In such an environment, as a risk-off movement, dollar index might see some appreciation, and as you can see, such a coincidence, but it coincides with the lower boundary of this trend line. So I might expect, at least for a short-term reaction around here from the dollar index, and I will be talking about other instruments as well within the context of this chart, Just bear in your mind while I'm referring to this chart. First of all, in such an environment, energy producers tend to benefit from higher oil prices for sure. Defense and like a gold miners as a geopolitical play still intact. If tensions grow, defense names and gold mining stocks might outperform. They often like a shine in like some volatile and inflationary periods. So gold price would depend on actually not only like as a risk of play, but also it will depend on yields, US yields plus USD itself. While like a gold is classic safe haven, its upside potential might be limited if real yields or like a dollar strengthens too much. Because if real yields increases, then the investors will flow to the treasuries as they will get some like a free money, risk-free money in such an environment. And apart from that, I would be cautious in emerging market Asia and Europe side. Countries that import a lot of energy like India, Philippines, and mostly Europe for sure. But up until now, like euro as a currency is not struggling yet. US resilience versus like a global fragility is another issue. The US as a like a net exporter, maybe more insulated from like a rising oil prices economically through market volatility, but we'll see like if they're gonna let oil price to surge a lot. And yeah, like I would like, I mean, for now, fixed income instruments might act as a stabilizer. Consider like maybe short duration bond funds or like some flexible fixed income strategies might be a good play for now. They offer a yield at least, and the yields are considerably like relatively high. And within the context of, in such an environment, within the context of Forex pairs, I would actually looking into shorting opportunities for Australian and New Zealand dollars. Just like as a reminder, if commodity exporters like Australia or New Zealand, if their currencies appreciate, that means like factories, for example, in China are like keep producing. The growth is there, right? So they are like demanding these currencies in order to buy those those commodities to make some product. That's the main mentality of Australian dollar or New Zealand dollars to be a risk on currency. If there's no demand for those currency, then production is going bad. Then there should be a risk of environment. So that's why, for example, in order to monitor, in order to measure if the sentiment is switching from risk on to risk off, I generally follow, for example, Aussie dollar, Japanese yen currency as an indicator. That's why if these two currencies depreciates, we should question the risk on sentiment for sure. And yeah, like, so before getting to the charts, let's quickly check the economic calendar of this week. What are the major issues, major news around? First of all, on Tuesday, we're going to receive United States like CB consumer confidence, which is highly important indicator in order to measure people's perception on US economy, and it gives some hints on current growth, as we are going to get US GDP number on Thursday, and durable good orders, another indicator of growth, another growth indicator. So up until Friday, we're going to receive some data on growth side or on like a economic activity side. On Friday, the major highlight, we're going to receive PCE number, which is the most important inflation indicator for Federal Reserve. So let me quickly switch to charts. First of all, I would like to start with Euro Aussie dollar trade idea that I had mentioned last week. And as you can see, I had mentioned this weekly chart, potential breakout, after the breakout, it was pulling back. And last week, I had mentioned this potential reversal after this move, right? And as you can see, this was the game plan, which is acting pretty well right now. Currently, I mean, I think this was around here when I had mentioned. Currently, if you had a stop loss around here, it's around 1-to-1 risk reward ratio. But I think at least there's still room it to move, especially euro being in this like uptrend, and you can take your profit around here if you had used this trade idea. Another trade idea that I had mentioned again, Euro New Zealand dollar last week. Again, weekly chart, there was a breakout, pullback, and in the daily chart, this pullback was reversing. And there was this rectangle chart pattern that I had mentioned. For the ones who wanted to enter early, I had I just talked about this. Maybe you can just put an early entry here, and if it moves well, you can just increase your exposure around here with a stop here. That was the game plan that I had suggested, and it's playing quite well right now, and it's broken out right now, and I think like I would be riding this up until around 1.98 levels. Another trade idea that we can mention again as a short trade idea of New Zealand dollar. Here you can see this descending triangle chart pattern, breakout, pulled back, and it's like after seeing a rejection from this previously support level, currently resistance level, and after this rejection, you can have a short position around. You could have such thing with a stop around here, but I mean the move apparently started, but we might see some pullback activities around here. If you see such thing, you can utilize from New Zealand franc short trade opportunity. Aussie dollar is another one in the weekly chart. This was a trade idea that I had sent through Rationale newsletter service that you can subscribe from the link below the video. And there was this weekly symmetrical triangle chart pattern in which we saw this breakout and pullback. There was like a fake breakout and like a trying to resume its downtrend. I think we're in a good spot to short this as well in an environment like risk of sentiment kicked in, and if you also if you're also waiting the reversal in here in this dollar index, as I had mentioned, because this move means some weakness in other currencies like Aussie dollar that I'm trying to mention here. If you just want to bet on potential US strength, this is a nice idea with a stop loss around here. It gives, if you just run up until here, it gives 1-to-5 risk reward, 1-to-2 risk reward ratio. It's pretty nice trade idea. Dollar index, I'm not mentioning it again. In EURUSD, I'm following this potential formation of up with handle. If I see a breakout around here, I might consider to be long, but the trade ideas that I show, Euro Aussie, Euro New Zealand dollar, these 4 trade ideas are superior than Euro USD for me for now. And I would like to mention this Ethereum Bitcoin chart again. As I had mentioned this, we might see some potential outperformance of altcoins relative to Bitcoin. And generally, if we see a reversal, as you can see here, after the first bounce, as you can see here, let me show you like this. Here, after the first bounce, it comes back and does that, right? As you can see here, it's bounced, it's coming down with the war, geopolitical tensions. And if the risk on sentiment kicks in, we might see some resumption of this activity like this in Ethereum Bitcoin. Within the context of this mindset, let me show you Bitcoin chart quickly. In the weekly chart, if you're following our videos I was mentioning this trend line a lot, and I had mentioned that we can see some pullback activity from here. If you had followed our videos, that this is nice selling opportunity, as we can see some pullback opportunity, some rejection from there, and the price might converge to this trend line also. And if such thing happens, a potential rejection from there would lead to form a head and shoulder continuation chart pattern in Bitcoin, like as you can see, like this. One shoulder, head and shoulder, if we see a rejection. So still in the long term, I'm bullish on Bitcoin for sure within the context of this technical chart, but I'm seeking to be long. I would seek to be long if I see some reversal pattern. And lastly, I would like to mention this Ripple chart, as we can see that outperformance of altcoins on Bitcoin, like a cryptocurrency like Ripple would outperform, and that's in that regard, I'm following a potential reversal here, which would also lead to form the right shoulder of this head and shoulder bottom chart pattern formation. That's why I'm seeking to see, as you can see, the rejection point here. Rejection point here. Sorry. Oops. As you can see, same level. So this, apparently this 1.90 levels in Ripple is highly respected. That's why I'm watching to see a reversal point in this cryptocurrency. And lastly, I just want to talk quickly. I will show you this natural gas chart. Sorry, not this one. ETF was the one. There's a weekly chart pattern here, and this might act as a reversal after a downtrend or continuation after this downtrend. So it might act in both ways. I'm just showing you this, just you can use this. You can put this in your like a watch list, and if you see a breakout, you might evaluate this to be long in this one. That's only technical side I just wanted to share, especially amid this geopolitical uncertainties. I expect it to go a little bit higher, to be honest. And yeah, more or less, that's all I'm going to talk about this week. I hope you find useful whatever you see in these videos. If you have any question, just please like write as a comment. And we would appreciate if you just support us with your likes and with your subscription to our YouTube channel. And you can also visit Marketsall website from the link below, plus Rationale newsletter service. You can subscribe for free and get all these trade ideas directly to your inbox. I wish you a really nice week. Bye.